All right, I'm welcome back for the episode of Carnivore Trade. Today is Friday, February 18th, 2022. So market's finishing lower here, and basically it was kind of a controlled sort of algo sell-off, a typical kind of OPEX Friday sell-off. There wasn't really fear or panic. You can see as we got to the low here, VXX wasn't really making a new high. I mean, it just barely clipped the new high here, but as we were making this low, we didn't get capitulation volume. We didn't get anything that suggested there was a real concrete bottom in place. That said, the S&P, SPY here rallied 5 handles in about 90 minutes. So a huge, huge rally. It did stall out at the 50 moving average, and then we kind of faded back in a little bit. We got another conveniently placed news report about Russia invasion right in this area after 3 o'clock. Markets dipped down, they popped it back up, and they pinned it right to 434. So a typical type of OPEX kind of price action here. And, we'll respect it. The bears definitely still in control, and they're still, able to push this market lower. That said, it's going to be interesting to see where we open Monday and how we trade after OPEX is over with. Also, we have a 3-day weekend. We have the holiday President's Day, which is observed Monday. And allegedly Biden is meeting with Putin, or at least having a call with him, I believe this afternoon. So we'll see how that goes. And there's just a lot of things that can happen. I, for one, believe that a lot of the news this week was, or at least a lot of the market's reaction to the news was essentially kind of an excuse for the market to do what it wants to do anyway. And I've been kind of saying that all week long. But there you have it. We did finish close lower on the week here, despite having a nice little rally here in the afternoon. Anyways, let's look through here some sectors. So I think that possibly, here's high yield debt here, but I think possibly we're probably going to have to come down and test this 430 handle. So we got these pivot lows in here, and you can see that it's also a 7.5 retrace. Usually the 7.5 is a good retrace level. The 618 holds up, but this is kind of the level where everybody sort of gives up. And that's why it can kind of hold. And there's, still a lot of bears in this market, a lot of puts being bought here as the market dips down. So I do think that, we had a chance to bounce. We couldn't hold this gain here. We bounced up. We couldn't hold the gains here. I think ultimately we have to go down and test that 430 area. That's going to coincide with probably about the double bottom area on the triple Qs, maybe just above that. On the diamond, it is, I would say, probably around 338. So you got a couple of pivots in here. The diamond's held up a lot better than the other indices, so it probably won't get anywhere near double bottom, at least not right now. So I would say right around 338. And then on the IWM, it really depends, because it depends on which IWM we get, right? So sometimes the Russell, over the last couple of weeks, Russell has outperformed a few days, and then some days it underperforms. So it depends on which one we get. But you got this little pivot here at 195. You got this green bar low, so maybe somewhere between 194 and 186 there on the Russell. That's kind of where that area would be, in my opinion. Anyways, let's go through a few sectors here. Start with the semiconductors. So down just over 1% today, still inside of this big red bar here. So you do have an inside bar building on the daily. We'll see how that plays out next week. Nvidia did get below that red bar low, kind of just puked after earnings here. And it held at the 200-day moving average. It came off the lows a little bit. You do have a gap fill just below that. So we'll see if maybe it tries to fill that next week. But for now, it did hold that 200 MA. AMD was a bit of a bright spot for the semis. It basically flattish to positive there, up 1.3%. Then you had Intel, which really got hit hard, gapping down and finishing lower over 5% there on pretty heavy volume. Let's see IGV here. So cloud software continues to be weak. Actually almost touching double bottom already. In comparison with the triple Qs, which is close to double bottom, this one's actually almost there. You look at Salesforce. This is coming into a bit of a level, but this one's getting pounded. So you got this level going back. This is basically your pre-pandemic high. So big level there for Salesforce. Adobe just getting bludgeoned here. This might want to go down and retest right around that 430. Maybe it gets down to 425 if it really flushes. But just look at the haircut here on Adobe. Oracle, I think this one needs to go down to about 73. I've got a level worked out right there. But just a beat down there. Look, gapped up, I believe, on earnings, and then just completely just distribution right after that. So cloud really just been a weak area, and one of the areas leading this market lower here. Dow Transports, down 0.2%, so not a huge move here. They kind of held up okay considering how bad the rest of the market was. We talked about this little inside bar. It started to play out a little bit, but it managed to hold that 15,000 handle, essentially, give or take 30 points. By the close, again, it's going to matter, where it closes Tuesday. So, with after OPEX, there's always lots of noise. We had tons of rumors this week, both good and bad. And, now that that's over with, we'll see where the market really wants to end up. But again, you have this pivot down here. You got this kind of opening low here. So, maybe if we gap down, we'll see if that holds a support. But Dow Transport's not in nearly as bad a shape as a lot of other sectors for what it's worth. Home builders barely hanging on by a thread here. So just holding that green bar low right here, rolling over, and that's going to be a test on Tuesday. So if this can hold that, it'll be safe for now. But I mean, this is just hanging on by a thread here. VNQ. This one's holding on to that 102 handle as well, and got this red bar low here, and you'll have some support at that tail candle. But again, just weakness in these home builders and real estate stocks. Rates did pull back a little bit. There's a 10-year here down 2%, 30-year down just about 2.6% there. Coming into that 20 moving average, again, we talked about this over the last couple of days, just getting overbought, extended, needed to pull back. We'll probably have some support around 2.19 to 2.2% there on the 30. On the 10-year, you have support around 1.8, maybe 1.7 if we really start to pull back a little bit further. But again, yields just kind of overbought. Really strong move though. And yeah, we'll definitely respect it for now. Financials, XLF, kind of a quiet day considering the noisiness and the rest of the market. Again, financials remain a strong sector, basically flattish to negative across the board. JPM actually did manage to scratch out a gain here. Broker dealers did finish a little bit lower, but holding that triple necktie of moving averages right there. So, and coming off that low, so we'll see if it gets a bounce on Tuesday. Morgan Stanley, which got bludgeoned yesterday, started lower and got all the way down to these pivots here, but did come off the lows here. So we'll see if it can hang on next week. But just a pretty, got right up to that all-time high and then pretty much reversed all 100% of that move. So pretty big reversal there for Morgan. XLE, again, just kind of flirting with this 20 moving average. The other day it gapped down and then rallied up. Same kind of deal here today, finishing flattish to negative. XOP, same kind of deal here, gapped down, came off the lows, then came back down, just kind of all over the map here today. OIH, little doji candle, still inside of this green bar and still holding trend, so we'll give it the upside bias. So crude having a little bit of a test candle here, got through that 20 moving average. Again, we talked about how it had been basically a month and a half, if not longer, since we had even touched the 20 moving average yesterday. So we got a bit off of that, pierced through it today, hit that 88 handle. There's a little bit of chop in here, got some support, and then ultimately closed green with a tail candle on volume. Could this possibly have been an initial distribution phase? It's possible. You can't rule that out. But for the meantime, crude is still holding trend. And, again, I say this every single day, but there's no real sell signal on it. And again, there's nothing to say it can't get up to $100, at least for right now. Nat gas continuing to pull back off that 100 MA. So we'll look for pattern here. If it starts to put in a bullish pattern, maybe it wants to pop up and test that 5 to 525 area, possibly get up as high as that 544 handle. But again, would it surprise any of us if it just rolled over as well, considering the roller coaster move that has been on over the last couple of months? Anyways, moving on to the dollar. Dollar getting a little bit of bid, a little bit of an outside day here. We talked about this yesterday, how it was strange that the dollar was kind of flattish with kind of there being such a risk-off move yesterday. But it did get a little bit of a bid today. Some of this may be OPEX related. Ultimately, really what we're going to look for in the near term here is pattern. The dollar index starts going sideways. We talked about getting above this green bar here. If it can start going sideways, then maybe it can go up and attack those highs again and maybe try to get up to that 97 handle in the meantime. So we got to talk about gold as well, of course, finishing with that nice little hammer candle on a Friday. So a power bar and then a hammer candle. That's not a bearish candlestick. And you guys know essentially the deal here. I've told you about the resistance around 1900. We did get through that today and made a new nominal high going back to May. But ultimately, what I'm really looking for here is that monthly candlestick. So we have this inside bar here on the monthly. If we can close above that at 1919 spot 2, that's very bullish, and we probably go up to all-time highs very quickly. Until that happens, though, we still have next week, and then we have the 28th, which would be the last day, and that's a Monday, not next Monday, but the following, And that's what we have left of the month of February. It's a short month. So we'll see what it does here. And again, we talked about this. We know the playbook. Run it up into OPEX and sell it off. We'll see if they do it one more time. But for right now, I didn't see anything wrong with the gold market this week. GDX having a nice week, did come off the highs here today a little bit. And GDXJ came off the highs a little bit more so. But ultimately a nice pop and kind of confirming that move here. Did stall out of that 200 moving average. So silver, which has been a little bit weaker than gold, not as much of a fear play as gold is, did make a higher high. So we'll give it that. Did not close above this red bar high at 24.01, but it had a nice little pop this week, and we'll kind of give it the benefit of the doubt for now. Platinum did reverse, so it got up to that 1100 handle that I told you it was going to, and pulled back pretty sharply. I still think it's possible it could get up to 1115, 1125, but probably need to put in a little bit more of a pattern here, maybe do a little bit of backing and filling, but nice pop this week on platinum. Just came off the highs a little bit on Friday. And palladium, nothing really wrong here, a little pullback. It came off the lows again, and I like this weekly pattern. If it's going to do a little bit more backing and filling, this has got a nice shot to get a pop up to about 2700 there. So nice move there for palladium. Copper, finishing green on the day, but now you're starting to put in a little bit of an inside bar here. So came up here, tried to break out, couldn't. Huge red bar, and now you're inside of that. That could potentially be a bearish pattern, so we'll keep that on watch for sure. Flipping over to Bitcoin, Bitcoin, not a whole lot going on. Bit of a quiet day, down 1%. Not a huge move. A lot of things were getting bludgeoned today, so this actually held up okay. Printing a bit of a doji so far. We'll see what it does over the weekend. This is going to trade with the geopolitical news that is inevitably going to come out this weekend. So maybe that'll give us a clue as to what goes on next week. But ultimately, I still like that 39 handle. So probably it's going to have to come back and test that 39 to 38.5 area on Bitcoin futures. And, basically if it holds that, it can possibly, come back up and make a higher high. If not, then, you're probably headed back to the lows. But for now, I don't see anything really wrong with it. You did have a bit of a rejection here yesterday, but it held up okay today while a lot of things were getting pummeled. So we'll give it the benefit of the doubt. Anyways, guys, to wrap up here, again, I still think we probably at this point, given the sell-off here, the lower high, we're probably gonna have to test 430 here on the SPY. And again, that coincides with probably about double bottom here on the triple Qs. So we might see that tested. Maybe it, if it has some strength, it only goes down to 338 or so, but I would not rule out double bottom at all there on the trips. Anyways, guys, take care. Thanks for watching, and I will talk to you all next week.